Subscribe to LearnCab and hit the bell icon to get notified.
Friends, the next change is under composition scheme. As we all know, friends, there are two composition schemes. One is of 10.1 and 10.2. Another one is of 10.2a, which is exclusively designed for service providers. Now, friends, there is an amendment in 10 subsection 2. It states that the registered person shall be eligible to opt under subsection 1. That means 10 subsection 1 composition scheme can be opted only if these conditions are satisfied. Let's have a look at the highlighted words. Point number B, C and D. If he is not engaged in making any supply of goods or services which are not leviable to tax under this act. Friends, prior to amendment, the condition was that he should not be engaged in supply of goods which are not leviable to tax under this act. The amendment has included the word services. So now, friends, if a person is engaged in making any supply of services which are not leviable to tax, which means non-taxable supply of services, a person would not be in a position to opt for the composition scheme of 10 subsection 1. Friends, what do we mean by supply of services which are not leviable to tax under GST? It is basically a non-taxable supply of services. Friends, as regards as non-taxable supply of goods is concerned, we do have certain cases. We have alcoholic liquor, we have petroleum products. But friends, as regards as non-taxable supply of services is concerned, as of date, there are no such services upon which there is no levy of GST. Of course, there are services which are exempted from GST, but there are no services on the current date which are not leviable to GST. So friends, this amendment practically is not having much of impact. Point number C. If he is not engaged in making any interstate outward supply of goods or services. Friends, prior to the amendment, it only stated that he should not be engaged in making any interstate outward supply of goods. Now it states he should not be engaged in making any interstate outward supply of goods or services. So friends, a person who wants to opt for composition scheme of 10 subsection 1, 10 subsection 2 states that he should not be engaged in making any interstate supply of services. Friends, can 10 subsection 1 composition scheme fellow supply services? The answer is yes, but without any restriction, or there is some restriction which is being placed. Friends, as regards as restaurant services are concerned, food related services are concerned, for restaurant services, there is no restriction at all. Up to the entire threshold of 150 lakhs or 75 lakhs as the case may be, these services can be supplied. As regards as other services are concerned, there is an inner threshold on it. The inner threshold is, it is 10% of turnover in the state in the preceding financial year, or rupees 5 lakhs, whichever is higher. So now friends, to that extent, either restaurant services without any inner threshold, other services within the inner threshold, he can supply services, but those supply of services which is making should not be an interstate supply of services. The next one, he is not engaged in making supply of goods or services through an eco who is required to collect tax at source under section 52. Friends, prior to the amendment, it covered only goods. Now it says any services if they are supplied through an eco, wherein eco is supposed to collect tax at source under section 52, then that particular registered person who is making the supply of services through this eco will not be in a position to opt for the composition scheme. So now friends, these three changes which have happened, these three amendments which have happened, amendment to 10 subsection 2, clause B, clause C and clause D, where the words or services have been inserted. The purpose of this insertion is to bring an alignment between the conditions of 10.1, 10.2 vis-a-vis 10 subsection 2a composition scheme. If you look into the conditions of 10 subsection 2a composition scheme, these words or services were already there. To bring in alignment with 10 subsection 2a, 10 subsection 2 has been amended. So now friends, as of today, the conditions for 10 subsection 1, 10 subsection 2 composition scheme vis-a-vis 10 subsection 2a composition scheme are almost similar. Friends, what do we mean by almost similar? Is there any change? Is there any difference between the conditions of these two composition schemes? The answer is yes. Let's have a look. What is the difference? Friends, the difference is, okay, we'll just see all the differences before we go to the exact difference of the condition. The broader differences are aggregate turnover limit, 10 subsection 1, 10 subsection 2. This first composition scheme, 10 subsection 1 tells 50 lakhs. It also empowers the government to enhance this 50 lakhs limit by notification to 150 lakhs. So friends, the government has enhanced it from 50 to 150 lakhs. Also, for few of the special category states, the aggregate turnover happens to be 75 lakhs. The threshold happens to be 75 lakhs. But 10-2A composition scheme, it is 50 lakhs. There is no power to the government to enhance the limit. If at all this limit has to be enhanced, it needs to come by an amendment through the Act. Another thing is there is no two different thresholds for special category states and for other states. Single threshold of 50 lakhs. Supply of services. This composition scheme fellow can supply only the following services: restaurant services and other services within the inner limit. This composition fellow can supply any services because this composition scheme itself is designed for these fellows. Eligibility. 10-1, 10-2 friends. In the current year, he should not be a manufacturer of notified goods. In the previous year, also, he should not be a manufacturer of notified goods. But friends, as regards as 10-2A composition scheme is concerned, in the current year, he should not be a manufacturer of notified goods or a supplier of notified services. So friends, here there is a difference between 10-1-2 and 10-2A composition scheme. As regards as the current year is concerned, in 10-1, 10-2 composition scheme, he should not be a manufacturer of notified goods. Few goods have been notified. In 10-2A composition scheme, he should not be a manufacturer of notified goods or a supplier of notified services. Although friends, no services have been notified till date for this purpose, but however, there is a difference in this condition. But however friends, as regards as previous year is concerned, for 10-2A, it states that he should not be a manufacturer of notified goods. The wordings or a supplier of notified services is missing. This could be due to oversight. Otherwise, since in the current year it says supplier of notified services, in the previous year also it should have been supplier of notified services. However, in my view, due to oversight, these wordings have been missed. So as regards as 10-2A composition scheme is concerned, in the previous year, he should not be a manufacturer of notified goods. Now friends, as regards as previous year is concerned, 10-1, 10-2 composition scheme and 10-2A composition scheme, coincidentally they are in alignment. Because of this oversight. Here also it states not a manufacturer of notified goods. Here also it states not a manufacturer of notified goods. So this was the difference which we are speaking, the difference in the conditions. Otherwise, rest all the conditions remain same. Rates friends, here it is 1%, 5% and here it is 6%. The next one, the amendment in time limit for availment of input tax credit. Now friends, what is the time limit for availment of input tax credit? The scenario prior to amendment. It should be availed before the earliest of the due date of furnishing of the return under section 39 for the month of September following the end of the financial year, to which such invoice or invoice relating to such debit note pertains, or furnishing of the relevant annual return. Now friends, if you look carefully here, the due date of furnishing the return under section 39 for the month of September following the end of the financial year, to which such invoice pertains or invoice relating to debit note pertains. So friends, here the last date for availing input tax credit was linked to the date of invoice. Even for debit note, the time limit for availing credit based on the strength of debit note, the time limit was linked to the date of invoice and not to the date of debit note. A debit note did not have any independent time limit of its own. The last date for availment of input tax credit on the strength of the debit note was the last date of availing input tax credit based on the date of invoice and not based on the date of debit note. So friends, the industry represented and they wanted the time limit for availment of input tax credit on the strength of debit note to be independent based on its own date and not based on the date of invoice. Friends, if you could recollect parallelly, if you understand, let's suppose who is the person who has to issue a debit note. Let's suppose wherever the value of supply which was declared in the invoice was shorter than the actual value of supply, then for the difference a debit note needs to be issued. Similarly, wherever the tax which is actually payable is greater than the tax which is already paid in the invoice, then a debit note needs to be issued. And friends, if you could recollect, there is no outer time limit for issuance of a debit note. Now friends, when there is no outer time limit for issuance of a debit note and issuance of a debit note is mandatory for the supplier. Let's suppose I issue invoice today and after 2 years I am issuing a debit note. If I am issuing an invoice today and after 2 years, if there is a change in value, am I required to issue a debit note? The answer is yes. Is it mandatory? The answer is yes. Even after 2 years, there is no outer time limit. I will have to issue a debit note. Now friends, when I have to issue a debit note as a supplier, I have to pay taxes to the government. Can the recipient take credit? Now friends, if the last date to avail credit on the strength of a debit note is linked to the date of invoice, the time limit would have already lapsed. At one end, you are asking the supplier to mandatorily raise a debit note, pay the taxes to the government. There is no outer time limit for issuance of debit note. At the other end, why is input tax credit being restricted at the recipient's end? Why is the input tax credit being linked to the date of invoice? So therefore, the amendment. Now it says, time limit for availment of input tax credit, it needs to be availed before the earliest of the due date of furnishing of the return under section 39 for the month of September, following the end of the financial year to which such invoice or debit note pertains. The wordings invoice relating to such debit note has been removed. It says to which such invoice pertains or debit note pertains or furnishing of relevant annual return. Let's take an example. Situations prior to amendment and situation after amendment. Invoice dated 1st April 20. For this particular invoice, a debit note was issued dated 1st April 21. Annual return for financial year 2021 is filed on 25th November 2021. So now friends, prior to amendment, the last date for availment of input tax credit of the debit note was also based on the date of invoice. So friends, the invoice is fitting into financial year 2021. For financial year 2021, the last date for availment of input tax credit is September month following the end of the financial year. So it is going to be September 2021. For September 2021, the due date for filing the return happens to be 20th October 2021 or actual date of filing annual return, whichever is earlier. So it is going to be 20th October 2021. 20th October 2021 is going to be the last date for availment of input tax credit of this part of the GST which is contained in this particular debit note. Friends, after amendment, the same facts, invoice dated 1st April 20, debit note dated 1st April 21. Now friends, the last date is linked to the date of debit note and not to the date of invoice. So friends, the debit note fits into financial year 21-22. For financial year 21-22, the last dates are September month following the end of the financial year, which means September 2022. The due date for filing is 20th October 2022. Annual return filed on 25th November 2022, whichever is earlier, you have 20th October 2022. So friends, now if you could see, the debit note dated in both the cases before amendment 1st April 21, after amendment also 1st April 21, but prior to amendment, the last date to avail input tax credit was 20th October 21. After amendment, the last date to avail input tax credit is 20th October 2022. The next change in 36 sub rule 4. The next change is in 36 sub rule 4. Friends, what was 36 sub rule 4? If you could remember the crux, only if the supplier is going to file the invoices in his GSTR1, the recipient will be in a position to take the credit. So friends, what was the crux of the statement? The crux of 36 sub rule 4 was how much credit can be taken. Prior to amendment, it was 110% of eligible credits of GSTR-2A subject to a maximum of eligible book credit. So this was the crux of 36 sub rule 4. Now friends, 36 sub rule 4 has been amended that additional 10% which was given of those invoices which were furnished plus 10% you could have taken. That 10% which was given has now been reduced to 5%. So now friends, the crux of 36 sub rule 4 is going to be how much credit is a person entitled to take. It is going to be 105% of eligible GSTR-2A credits subject to a maximum of eligible book credit. So friends, here 10% is replaced by 5%. So input tax credit to be availed by a registered person in respect of invoices or debit notes, the details of which have not been furnished by the suppliers under 37 subsection 1 in GSTR1 or using IFF shall not exceed 5% of the eligible credits available in respect of invoices or debit notes, the details of which have been furnished by the suppliers under 37 subsection 1 in GSTR1 or IFF. So friends, now the simple term is, according to 36 sub rule 4, the maximum credit which a person is entitled to is 105% of eligible GSTR-2A credits, subject to a maximum of eligible book credit. And friends, another small change in the wordings which is there is, here the words were uploaded. Prior to amendment, 36 sub rule 4 contained the words uploaded. Now it contains the word furnished. So friends, the difference is, what is the difference between uploading and furnishing? As regards as uploading is concerned, you just upload the details of invoices. GSTR1 need not be filed. But now friends, it says mere uploading is not sufficient. GSTR1 needs to be filed. Only then the opposite person would be in a position to take the credit. This is a small technical difference, friends. Otherwise, the major difference is from 110%, it has now come down to 105%. And friends, the way the government is approaching this 105% in future is further going to come down to 100%. So friends, currently it is 105% of eligible GSTR-2A credits, subject to a maximum of eligible book credit. So now friends, this discussion is over. Now we move on further. Let me put another scenario before you. There is one invoice which is dated 15th of August. Please concentrate very, very carefully. One invoice which is dated 15th of August. GSTR1 which is filed by the supplier and appearance in GSTR2A of the recipient. That means, please understand, for the tax period August, let us assume, or let us for now just understand, the due date of filing GSTR1 is 11th of September, 11th of next month. What are the exact due dates? We'll see that later on while filing or while studying the chapter of return filing. For now, just understand, for GSTR1, the due date happens to be 11th of subsequent month. Tentatively just understand this. Precision understanding, we'll do it in the chapter of return filing. So now friends, invoice dated 15th August. For the tax period August, the due date of filing GSTR1, 11th September. So now this gentleman, this supplier, is filing his GSTR1 and including this invoice 5th of September. On 5th of September, he includes this invoice and files his GSTR1 well before due date of 11th of September. Now friends, when is it going to appear in my GSTR2A? In my GSTR2A, it will obviously appear on 5th of September itself, because he has filed his GSTR1 on 5th of September. It will appear in my 2A on 5th of September. Now friends, I am going to file my GSTR3B. In my GSTR3B, I am going to see what is my output tax, what is the input tax credit which is coming in my 2A, multiplied by 105% of eligible 2A credits, subject to maximum of eligible book credit. I will do all these calculations and I am going to pay the taxes. So filing of GSTR3B by the recipient, I am going to file my GSTR3B. Friends, for the tax period August. For the tax, we are talking about the tax period August. For the tax period August, the due date of filing GSTR3B happens to be 20th of September. So friends, by 20th of September, I should file my 3B. I file it on 15th of September itself. I am going to file it on 15th of September itself. So now friends, availability of input tax credit as per 36 sub rule 4. Now these are the facts which are given before you. Invoice dated 15th of August, included in GSTR1 of the supplier 5th of September, well before the due date. I am filing my 3B by 15th of September for the month of August, well before the due date. 20th September is the due date. Am I eligible to take the input tax credit of GST contained in this particular tax invoice of 15th of August? Yes. According to 36 sub rule 4, I am eligible to take because this is appearing in my GSTR2A. So far, so good. Let's take another example. Invoice dated 15th of August. Invoice dated 15th of August. Due date for filing GSTR1 by the supplier is 11th of September, but this person is filing on 15th of September. This person is filing his GSTR1 on 15th of September. Filing of GSTR3B by the recipient. As a recipient, he files his GSTR1 on 15th of September. On 15th of September, when I am checking my GSTR2A, it is appearing in my GSTR2A. On 15th of September, I am going to do the calculations. Output tax is there. Input tax credit, how much I can take? I can take according to 36 sub rule 4. Now the question is, my supplier has filed his GSTR1 beyond the due date. My supplier has filed his GSTR1 beyond the due date, but before I am going to file my GSTR-3B. Before I am going to file my GSTR-3B. The question is, will this invoice be treated as furnished by the suppliers in his GSTR1 and I can take the entire credit, or will this invoice be treated as not furnished by the suppliers in his GSTR1 because it is furnished beyond the due date? I repeat, this particular invoice which is furnished by the supplier in his GSTR1, will it go into the entire 100% bucket that I can take the full credit because it is furnished by the supplier in his GSTR1, or will it be treated as not furnished by the supplier in his GSTR1 because it is furnished after the due date of filing GSTR1? This is the question. Let's take another scenario. Keep this question on hold. 15th of August is the invoice date. Now this person is filing his GSTR1 on 22nd September. On 22nd September, the due date happens to be 11th of September. Now friends, I am waiting to file my 3B. The due date of my GSTR-3B, please understand from this point of, from my angle, just think. The due date for filing my GSTR-3B is 20th of September for the tax period August. But I am not filing it before due date because I want this credit to appear in my GSTR2. I am waiting for it. I am just waiting that when this invoice is going to appear in my 2A, and thereafter I will file my GSTR-3B, because in GSTR-3B I have to say output tax minus input tax credit. If I file it on 20th itself, this invoice is not at all appearing on 20th because my supplier has not filed his GSTR1. So my credits would be, let's suppose if this is the only invoice, if this is the only credit which is there, it would be 0. I will not be positioned to take any credit. So therefore I am waiting. Let it come in my GSTR2A. The moment it is going to come in my GSTR2A, thereafter I will file this. I am following with my supplier. Are you filing? He said just wait for a day. One day, and he's extended it. He is going to file it on 22nd of September. Now, if I am filing my GSTR-3B in a delayed manner, am I doing so? Yes, my due date is 20th of September. But I am filing on 23rd September, waiting for that invoice to appear in my 2A so that I can take the credit. By doing so, am I supposed to pay any late fees? Yes. There is consequences of filing returns in a delayed manner. I am ready to face those consequences because the working capital loss, if I am not able to take the credit, I have to pay my entire output tax. If I am filing the returns in a delayed manner, I will have to pay only late fees, but at least I can subtract my input tax credit. The interest cost or the working capital loss is more. So therefore, I am ready to pay the whatever nominal late fees which is there for delayed filing returns. But I want to wait and let it appear in my 2A. Then I will file the returns. The question is, if my supplier is filing the returns in a delayed manner, which return? GSTR1. It is appearing in my GSTR2A in a delayed manner. That means, point number 1, if my supplier has filed GSTR1 prior to due date. Point number 2, what if my supplier has filed GSTR1 after the due date? Are both these scenarios same? Ultimately, is 36 sub rule 4 saying he should file. Ultimately, 36 sub rule 4 is saying he should file, whether within due date, after due date, doesn't matter, he should file. If it is so, then whether the supplier is filing before due date or the supplier is filing after due date, for me, whenever it is appearing in my GSTR2A, I will take the credit. Accordingly, I'll apply 36 sub rule 4. Let's have a look at the wordings of 36 sub rule 4. The question is very, very precise. If my supplier has filed his GSTR1 after the due date, in which bucket am I going to consider it? Am I going to consider it in the bucket of details furnished by the suppliers, or am I going to consider it in the bucket of details not furnished by the suppliers? If I am going to consider it in the bucket of details furnished by the suppliers, I will be taking the entire credit. If I am going to take it in the bucket of details not furnished by the suppliers, I will be in a position only to take the restricted credit of only 5% of those invoices, the suppliers of which have filed their GSTR1 before due date. Let's have a look at 36 sub rule 4. Input tax credit to be availed by a registered person in respect of invoices or debit notes, the details of which have not been furnished by the suppliers under 37(1) in GSTR-1 or using IFF shall not exceed 5% of eligible credit available in respect of invoices or debit notes, the details of which have been furnished by the suppliers. So friends, does it anywhere tell you that the details have to be furnished before the due date? Thus 36 sub rule 4, anywhere does it tell you that the details of invoices needs to be furnished before the due date? It is silent upon due date. Those invoices furnished after the due date, will it go into the bucket of details furnished by the suppliers, or will it go into the bucket of details not furnished by the suppliers? 36 sub rule 4 is silent on it. So let's see what the circular has to say. Circular number 123, this question was raised. Form GSTR-2A being a dynamic document. Friends, what is meant by dynamic document? It would keep on updating on a daily basis. Let's suppose for the tax period August, today a person is filing his GSTR-1, it will get updated today. Let's suppose tomorrow if he is filing for the tax period August, an invoice pertaining to tax period August, the details of which is going to be included in the GSTR-1 of August by my supplier. Tomorrow, GSTR-2A for August will again get updated. Day after tomorrow, again it will get updated in day after tomorrow. As and when the suppliers are filing their GSTR-1 for a particular tax period, in their GSTR-1, at the back end, for me, in GSTR-2A for that particular tax period, it will keep on changing. So GSTR-2A is a dynamic document. What would be the amount of input tax credit that is admissible to a taxpayer for a particular tax period in respect of invoices or debit notes whose details have not been uploaded by the suppliers? So it is asking what should be the cutoff date which should be taken. So it tells you, as on the due date of filing of returns of form GSTR-1 of the suppliers for the said tax period. So which means that, friends, please understand, 36 sub rule 4 is silent about the due date. Circular number 123 tells you that if the GSTR-1 is filed within the due date, please concentrate, if GSTR-1 is filed within the due date, that invoice credit I can take it fully. If it is not filed within the due date, I am not in a position to take it fully. Does it mean I'll never be in a position to take it? The answer is no. If it is filed after the due date, I can be in a position to take it in the subsequent tax period. Friends, please understand, if a supplier is filing his GSTR-1 and including my invoice within the due date, for the tax period to which this invoice pertains, I will be able to take the credit fully. If he is filing it after the due date, it is as good as, while calculating 36 sub rule 4, I will consider only those invoices which are filed within the due date. Those invoices which are filed after the due date, in my GSTR-2A, those invoices pertaining to the suppliers where they filed their GSTR-1 after the due date, I am not going to consider them in this tax period. I will be in a position to take this credit only in the subsequent tax period. I am sure you are able to follow this, friends. 36 sub rule 4 is silent. We will also be seeing more examples to get further clarity. For now, just understand 36 sub rule 4, 105% of eligible GSTR-2A of what? Of those suppliers who have filed their GSTR-1 within the due date, subject to a maximum of eligible book input tax credit. So now, friends, let's take an example. Invoice dated 15th of August. Invoice dated 15th of August. GSTR-1 is filed by the supplier and appearance in GSTR-2A of the recipient 5th of September. Due date is 11th of September. Filing of 3B by the recipient 15th of September. The same example what we are seeing, we are just continuing it again. Availability of ITC as per 36 sub rule for this tax period. We are talking about the tax period August. For August, whether I can take this full credit? The answer is yes, because GSTR-1 is uploaded by my supplier within the due date. In this case, GSTR1 is filed beyond the due date. So for this tax period August, I will not be in a position to take the entire credit. But friends, for the subsequent tax period, yes. How this workings will be, we'll be seeing it in a separate example. So now friends, 36 sub rule 4, can I take this full input tax credit? The answer is no, because GSTR1 is filed by my supplier beyond the due date. I will not be in a position to take the credit. For the tax period August, please remember, it is not a loss to me. For the tax period August, I will not be able to take the credit. In the next subsequent period, I will be in a position to take the credit. 22nd September it is being filed. So obviously beyond the due date, as per 36 sub rule 4, read along with the circular, I am not in a position to take this full credit, although appearing in my 2A before I filed the 3B, but still it is filed after the due date of GSTR1. For this particular tax period, I will not be in a position to take this credit for the tax period August. I will not be in a position to take full credit. So friends, now this leads to a demand from the industry. The demand from the industry is, the industry says, look, what appears in our GSTR2A, it is a dynamic document. Please follow this discussion carefully. The industry says GSTR2A, the taxpayers are representing, GSTR2A is a dynamic document. When GSTR2A is a dynamic document, how am I supposed to know which supplier has filed their GSTR1 within the due date, which supplier has filed their GSTR1 after the due date? Because whatever suppliers filed in their GSTR1, it is going to appear in my 2A. Whatever details which are filed by my suppliers in GSTR1, it is going to appear in my 2A. So now the industry is questioning, how am I supposed to know, looking into the 2A, how am I supposed to know which of the suppliers have filed the returns within due date and which of the suppliers have filed the returns after the due date? So the government says it's very simple. It is very simple. What is the due date for August month? 11th September. What is the due date of August month? 11th September. On 11th September, you download the GSTR2A from the portal. On 11th September, you download the GSTR2A from the portal. And on 11th September, whatever is the details which are appearing in your GSTR2A, all of them have filed the returns before the due date. Friends, please understand, when you download the GSTR2A, you will not get the date and time. The date and time of this particular invoice being uploaded by my vendor in his GSTR1 will not appear in 2A. In 2A, it will appear this invoice is filed by the vendor in GSTR1. It will not appear date and time of when this entry started to appear in GSTR2A. So now the government tells, it's very simple. 11th September, for the tax period August, you download your GSTR2A. Whatever is the details which are appearing, it's as simple as that. All of them have filed their details in GSTR1 prior to the due date. The assessee asks, what time should I download? The government says, let's suppose download at 6 p.m. Okay. I download my GSTR2A at 6 p.m. What if certain suppliers, after 6 p.m. they are filing their returns? After 6 p.m., if somebody is including their invoices in their GSTR1, will it not appear in my 2A after 6 p.m.? The answer is yes, it is a dynamic, it is going to change real time. The moment they file their GSTR1, furnish their GSTR1, it is going to appear in my 2A. If 8 p.m. somebody is doing, that entry will not be in my report of 2A downloaded on 6 p.m. The government says, fine. Then you download it at 12:01. 11th September, midnight, when the clock clicks 12 and the next date starts, 12:01 you download it. The assessee says, don't I have a family? You expect me to stay in the office at 12 and download 2A for me to comply with the 36 sub rule 4? Is it not too much demanding? So now the issue is, if the circular is saying that you can take the input tax credit for this particular tax period you can avail input tax credit only of those invoices which are furnished before the due date. Those invoices which are furnished beyond the due date, you will not be in a position to take the credit in this particular tax period. If the circular is saying so, then the government has also got to work and provide me a report. The government cannot expect me that I sit and download GSTR-2A at 12:01 at the midnight and say that yes, these are the suppliers who have filed their GSTR-1 before the due date. So now the government has to give me a report irrespective of whenever the suppliers are going to file their GSTR-1. The government has to give me a report for a particular tax period. For this particular tax period, August, at the back end you work, you do whatever you want. At the back end, the industry says at the back end you work, you do whatever you want. You provide me a report for the tax period, August. These are the suppliers who have filed their returns within the due date, who have filed their GSTR-1 within the due date. For the purpose of 36 sub rule 4, you take this report into consideration. So friends, the government has worked on it and the report is called as GSTR-2B. The report is called as GSTR-2B. So now friends, for a particular tax period, we are just updating the formula. For a particular tax period, for the purpose of complying 36 sub rule 4, should I check GSTR-2A or should I check GSTR-2B? I repeat, for a particular tax period, for the purpose of complying with 36 sub rule 4, should I check GSTR-2A or should I check GSTR-2B? The updated formula is I'll have to check GSTR-2B because GSTR-2B will contain a list of those invoices wherein the suppliers have filed their GSTR-1 within the due date for a particular tax period. I will download my GSTR-2B. 105% of eligible credits appearing in my GSTR-2B subject to a maximum of eligible book credits. And friends, please understand, for a particular tax period, let's say August, if I want to download GSTR-2B, any time I am going to download. I download today, I download after a month, I download after 2 months. It is not a dynamic document, it is a static document, it is not going to change. The answers are not going to change, the contents are not going to change because it is freezed for a particular tax period. From this period to this period, the suppliers who have filed or furnished the details in GSTR-1, it is going to reflect in GSTR-2B. So it is not going to be a dynamic document. So therefore friends, for the purpose of 36 sub rule 4, the equation now stands as 105% of GSTR-2B, 105% of eligible credits appearing in GSTR-2B subject to a maximum of eligible book credits. Friends, the next amendment is with regard to HSN codes. Friends, the contents of tax invoice and the contents of bill of supply require that HSN code needs to be mentioned on these documents. Now friends, HSN code is an 8-digit number. Out of this 8-digit number, how many digits are required to be mentioned on these documents? Friends, the position prior to amendment was something like this. If the ATO in the preceding financial year is up to 1.5 crores, no HSN is required to be mentioned on the document. If it is greater than 1.5 but up to 5 crores, the first 2 digits were required to be mentioned. If it is greater than 5 crores, the first 4 digits were required to be mentioned. Now friends, there is an amendment, Rule 46 and Rule 49, which speak about the HSN codes. The provisos have been amended and a notification has been issued. Let's have a look at the proviso and parallelly, let's also have a look at the notification. The proviso tells that, friends, the basic contents tells that HSN code is required to be mentioned. Now the proviso tells that both for tax invoice as well as bill of supply, the proviso tells that provided that the board may, on the recommendations of council, by notification specify the number of digits of HSN for goods or services that a class of registered person shall be required to mention. Friends, basically HSN is an 8-digit number. So the contents of tax invoice and the contents of bill of supply state that HSN code has to be mentioned on these documents. What do we mean by HSN code needs to be mentioned? It means the 8-digit number needs to be mentioned. Now there are provisos which states that the board is empowered to issue a notification wherein it can specify a class of registered person. It can specify a class of registered person and the number of HSN digits which these persons are required to mention on the document. So friends, under the notification has come under this. Here it tells that if the ATO in the preceding financial year is up to 5 crores, then the first 4 digits are required to be mentioned. Out of the 8 digits, if you are a registered person whose ATO in the preceding financial year is up to 5 crores, you need to mention the first 4 digits. If the ATO in the preceding financial year is greater than 5 crores, then you will have to mention the first 6 digits. Clause 2 of the proviso. Friends, please understand the flow. Basic contents of tax invoice and bill of supply state that you need to mention the HSN code. And what is HSN code? It is an 8-digit number. The provisos are giving some relaxations. Provisos are an exception. They are giving some relaxations. Clause number 1 stated that the board would notify a class of registered person and state that the number of digits of HSN code they need to mention, based on which this has come. The next point, the board is empowered to notify a class of supply of goods or services for which specified number of HSN digits shall be required to be mentioned by all registered taxpayers. So friends, in clause 2, the board is empowered to notify registered persons. No, notify a class of supply of goods or services. In short, the board is empowered to notify goods or services. Against these goods and services, how many digits of HSN code needs to be mentioned by all registered persons. So friends, under this the board has notified. Currently 8 digits have been notified for supply of few chemicals irrespective of ATO. So friends, there are few chemicals which have been notified. You need not remember the chemical number, names and all. So few chemicals have been notified wherein the board has stated that for these chemicals 8-digit HSN code needs to be mentioned. Now friends, let's suppose I am a person who is supplying these chemicals. I am a registered person. My ATO, let's say, is only 45 lakhs. How many HSN digits am I required to mention? I am required to mention the 8-digit HSN code. Let's suppose friends, I am supplying chemicals. These chemicals are notified. My ATO in the preceding financial year happens to be 45 lakhs. I need to mention 8-digit HSN. Along with these chemicals, let's suppose I am supplying certain other products. Let's say I am supplying this pen. Now friends, if I am supplying this pen, on the invoice which would be issued for the supply of this pen, what would be the HSN requirement? Now I need to check, since I am not supplying notified goods or notified services for the purpose of HSN, I come under the general category. My ATO in the preceding financial year is up to 5 crore. I would be mentioning the first 4 digits. So friends, me as a registered person supplying this pen, first 4 digits, supplying notified chemicals, the 8 digits. The next one, the board is empowered to notify the class of registered person that would not be required to mention HSN codes for goods and services. So friends, the board is also empowered to state that these category of registered persons need not specify or need not mention any HSN codes on their documents. So friends, here the board has said that if the turnover in the preceding financial year, if the ATO in the preceding financial year is up to 5 crore rupees, then I need to mention the first 4 digits, yes. However, mentioning this first 4 digits is going to be optional for B2C supplies. Mentioning this first 4 digits is going to be optional for B2C supplies. Let's suppose friends, I am a person whose ATO in the preceding financial year, let's say it was some 1.5 crores. Now friends, if I am supplying this pen, which is not a notified product, the number of digits of HSN which I need to mention, it is the first 4 digits. However, if this pen is being supplied under category B2C, I am supplying to an unregistered person, then for me, it is not mandatory to mention the first 4 digits of HSN code. I did not even mention the HSN codes. Now friends, this amendment which has come, it is quite harsh on the small taxpayers and also on composition taxable persons. Now friends, composition taxable persons, they are going to issue a bill of supply. Are they also required to mention the first 4 digits of HSN code on their document? The answer is yes, because here it tells you if the ATO in the preceding financial year is up to 5 crores, then the first 4 digits are required to be mentioned. However friends, in case of B2C supply, I have given an option not to mention, but even if a composition taxable person is making B2B supplies, he also needs to mention the first 4 digits. Now friends, the applicability of e-invoicing, there is a small change which has happened. Earlier, the threshold used to be 500 crores. Earlier, the threshold used to be 500 crores. From 500 crores, it has come down to 50 crores. So friends, upon whom is the e-invoicing provisions applicable? Only upon them whose aggregate turnover in any preceding financial year from financial year 17-18 onwards, in any of the financial year, if it has exceeded 50 crore rupees, e-invoicing provisions are applicable. Earlier it used to be 500 crores. Now it has been brought down to 50 crores. The government is trying to cover more and more number of registered persons. The government is trying to include more and more number of registered persons upon whom these e-invoicing provisions are going to be applicable. That day is not going to be far when the government would bring down this 50 crore rupees to 5 crore rupees. So friends, now it would be a case where, it could be a case in future where all the registered persons, from 50 it might bring down to 5, then it might bring down for all registered persons. So the target of the government is to cover all the registered persons under the e-invoicing provisions. Currently friends, the threshold has kept at 50 crore rupees. If the aggregate turnover in any preceding financial year from financial year 2017-18 onwards, if it has exceeded 50 crore rupees, e-invoicing provisions are applicable for those registered persons. Friends, there's a circular. There are a few clarifications as regards this dynamic QR code is concerned. Let's have a look at them. It's very simple. Whether dynamic QR code is applicable for export invoices as well. Now friends, there's a slight overlapping over here. Please concentrate. Your B2B QR code, which is your invoice reference number QR code, Rule 46 read along with 48 sub Rule 4. It is applicable for B2B supplies and for exports. Sixth proviso to Rule number 46, your dynamic QR code, it is applicable for B2C supplies. Now friends, as regards as exports is concerned, is it a B2C supply? The answer is yes. Does it get covered in this category of B2C? The answer is yes. Is it also getting covered in 48 sub Rule 4? The answer is yes. So therefore, is it a case that as regards as exports is concerned, it should have two QR codes? One, it should have a QR code having an embedded invoice reference number. Another one, it should have a dynamic QR code for the purposes of making e-payment. This was the question which was posed. Technically speaking, this particular category of exports is getting covered under both the QR codes. However, the circular has granted relaxations. It states that since 48 sub Rule 4 is applicable, since invoice reference number QR code is applicable, it is not necessary to have this dynamic QR code on the export invoice. So friends, although technically both these QR codes are applicable, the circular has granted relaxation and it states that for exports, this 48 sub Rule 4 QR code is sufficient. What parameters or details are required to be captured in the quick response code? So in dynamic QR code, what are the details which needs to be captured? Supplier's GSTN number, supplier's UPID, pay's bank account number and IFSC, invoice number and invoice date, total invoice value, GST amount along with breakup of CGST, SGST, IGST, cess. So friends, all these details should be present and therefore whenever QR code is being scanned, automatically the amount and the invoice details should appear, the supplier's details should appear, the UPI ID should appear, the bank details should appear so that the payment could be made immediately. Now friends, let's take a case where, what is the requirement? The requirement is either dynamic QR code can be digitally displayed. If dynamic QR code is digitally displayed and the buyer scans the digital dynamic QR code, makes a payment, that means first payment is being made and thereafter invoice is being issued. So it is a prepaid invoice. I repeat, digital dynamic QR code is made available to the buyer. Buyer scans it, makes a payment, thereafter invoice is being printed. In such type of invoices, dynamic QR code need not be printed on the invoice because payment is already made. It is a prepaid invoice. In such cases, the payment reference number needs to be mentioned and the mentioning of payment reference number would be a valid compliance of dynamic QR code. This is what we have already discussed. Now friends, the question is, let's suppose the supplier makes available to the buyer a digital dynamic QR code. However, the buyer does not choose to make the payment using this digital dynamic QR code. He either makes a payment through cash or let's suppose there's some other QR code which is there pasted on the wall. He scans it and makes a payment and then shows it to the counter person. Now friends, this also is a prepaid invoice. How is it being prepaid? It is not being paid using the digitally displayed dynamic QR code. Even though the dynamic QR code has been digitally displayed, the buyer still chooses to make a cash payment, or he still chooses just to scan the QR code which is pasted on the wall, which is not a dynamic QR code, and he makes the payment. Friends, GST law cannot force the buyer to make the payment using the digitally displayed dynamic QR code. So now friends, is this invoice also a prepaid invoice? The answer is yes. Let it be paid through cash. Let the payment come through other than dynamic QR code through a static QR code. Still, is it a prepaid invoice? The answer is yes, it is a prepaid invoice. Now friends, please tell me, if the invoice is already a prepaid invoice, what sense does it make? What sense does it make to print the dynamic QR code on the invoice? Because anyways, he is not going to make any payment now. The payment is already made. So therefore, in case of prepaid invoices, whether the mode of payment is cash, whether the mode of payment is UPI or any other means other than dynamic QR code, the question is it necessary for prepaid invoices to have a dynamic QR code printed on it? Let's read the circular. In cases where the supplier has digitally displayed the dynamic QR code and the customer pays for the invoice using any other mode, say UPI or cash, and the supplier, if he is providing a cross reference, that is the transaction ID, if he has made the payment through UPI, or the date of payment if he has made the payment through cash of the payment, the said invoice shall deem to have been complied with the requirement of dynamic QR code. So friends, in simple terms, this question says, I have digitally displayed the dynamic QR code. I have given an option to the buyer to make a payment through dynamic QR code. The buyer doesn't use this option. He has made payment either through cash or some other means, say UPI. And thereafter, I am going to give him an invoice, which means the invoice is a prepaid invoice. In those cases, if I am mentioning the cross reference of the payment which is being made by means other than the dynamic QR code, or if I am mentioning the date of payment if the payment is coming through cash, in those cases it is going to be a valid compliance of dynamic QR code. So friends, in simple terms, wherever invoices are prepaid, in those cases, reference number is sufficient. If the reference number is printed on the invoice, if payment has come through electronic means, the transaction ID, if payment has come through cash, in those cases, the date of payment, if that is mentioned on the invoice, it is a valid compliance. It is deemed to have been complied with the requirements of dynamic QR code. Now friends, what was this question? This question was, the supplier gives an option to the buyer. Dynamic QR code is also available, but still the buyer chooses to opt other than dynamic QR code means to make the payment. This we know the answer. Mentioning the cross reference of the transaction ID or the date of payment in case of cash will be a valid compliance of dynamic QR code. Let's look at the question. The next question is whether generation or printing of dynamic QR code on B2C invoices, is it mandatory for prepaid invoices where payment has been made before the issuance of invoice? This is what we have already discussed, but this question is slightly different. This question is slightly different in the sense that in this question, the option of making, please understand, the option of making payment through the dynamic QR code is not given to the buyer. The option of making a payment through the dynamic QR code is not given to the buyer. Simply the buyer makes a payment either through cash or he makes a payment using, or he is making the payment using some other means. Let's suppose he is making a payment using static QR code or UPI. In those cases also, if cross reference number is given either of the transaction ID or of the date of payment, it is going to be a valid compliance of dynamic QR code. So friends, what is the sum and substance of the discussion? The sum and substance of the discussion is dynamic QR code needs to be printed on the invoice only in those cases where invoice is not a prepaid invoice. After the invoice is printed, if the payment is going to be made, it is mandatory to have dynamic QR code printed on the invoice. However, in cases of prepaid invoices where invoice is printed only after the payment is being received, you first receive the payment and then you print the invoice. In case of prepaid invoices, The dynamic QR code printing is not mandatory. Cross-reference of the transaction ID or cross-reference of the date of the payment in case it is paid through cash is sufficient. It is sufficient compliance of dynamic QR code. The next question, it is similar. If the supplier makes available to the customers an electronic mode of payment like UPI Collect, UPI Intent or other similar modes of payment through mobile applications or computer-based applications where though dynamic QR code is not displayed but the details of merchant as well as the transactions are displayed or captured otherwise, how can the requirement of dynamic QR code as per this notification be complied with? Friends, you already know the answer. The answer is still going to be the same. What is going to be the answer? In case if it is a prepaid invoice, reference number is sufficient. In case if it is a postpaid invoice, which means you first print the invoice, then payment is going to be made, printing dynamic QR code is mandatory. Let's have a look. In such cases, if the cross-reference of the payment made using such electronic modes of payment is made on the invoice shall be deemed to comply with the requirement of dynamic QR code. However, if the payment is made after generation or issuance of invoice, the supplier shall provide dynamic QR code on the invoice. So friends, what is the crux of the discussion? The crux of the discussion is, in case of a prepaid invoice, it is only a two-line discussion. In case of a prepaid invoice, first payment is made, then invoice is going to be printed. Whether dynamic QR code is made available or dynamic QR code is not made available. Whether payment is coming through electronic modes or the payment is not coming through electronic means. In case of prepaid invoices, having the reference number of the invoice is a valid compliance of dynamic QR code. However, if the invoice is postpaid, which means that only after invoice is being issued to the buyer, the payment is going to be made. In those cases, it is mandatory to have a dynamic QR code printed on the invoice. Now friends, in case of electronic commerce operator, when the goods are supplied through an eco, once the eco or the online application has complied with the dynamic QR code requirements, will the suppliers using such e-commerce portal or application for supplies still be required to comply with the requirements of dynamic QR code? So friends, what it is trying to tell, let's suppose I'm making a supply through Flipkart. Now if Flipkart is complying with the requirements of dynamic QR code, am I also required to comply with the requirements of dynamic QR code? I repeat the question. Friends, I am the supplier. Flipkart is an e-commerce operator. The goods I am supplying through Flipkart, let's suppose to you. Who is supposed to issue an invoice? I am supposed to issue the invoice. I am the supplier. Flipkart is only a portal. It is only a platform. So when I am supposed to issue an invoice, who is required to comply with the requirements of dynamic QR code? Is it Flipkart or is it me? The answer is, it is me. It is my responsibility to ensure that these provisions are being followed. So friends, however, in case if it is a prepaid invoice, which means that first the buyer, you have already made a payment and only then the goods are going to be delivered. In those cases, the reference number of payment, if it is printed on the invoice, it is a valid compliance of the dynamic QR code. Let's have a look at the reply. The provisions of this notification shall apply to each supplier or each registered person separately. In case the supplier is making supply through eco and the said supplier gives the cross reference of the payment received in respect of the said supply on the invoice, then such invoices would be deemed to have complied with the requirements of dynamic QR code. However, in cases other than the prepaid supply, that is where the payment is made after generation or issuance of invoice, the supplier shall provide dynamic QR code on the invoice. I am sure you are able to follow this, friends. Friends, the sum and substance is only so much. As regards as prepaid invoices is concerned, printing reference number is a sufficient compliance. And as regards as postpaid invoices is concerned, printing dynamic QR code is mandatory. This is the total sum and substance of whatever we have discussed so far.
Subscribe to LearnCab and hit the bell icon to get notified.